Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend Podcast. 2026 definitely off and running. It's about 1 week since we found out that one of the pillars of U.S. economic governance was again under attack after Fed Chair Jay Powell announced that the central bank was served with a grand jury subpoena from the Department of Justice. It's not the only time the U.S. Central Bank was caught in the crosshairs of a president or investors for that matter. And on that, and what we can learn from our financial past, return to the New York Times bestselling author of Too Big to Fail in 1929, Inside the Greatest Crash in Wall Street History and How It Shattered a Nation. Andrew Ross Sorkin will join us.
All that to come. We begin, though, with the real-world impact of tariffs nearly a year after they were imposed by the Trump administration.
The Supreme Court did not rule on challenges to President Donald Trump's IEEPA tariffs this past week for a second time, leaving the world to wait until at least this coming week, possibly, to learn the fate of his signature economic policy. Again, possibly. It could be even longer before we get some kind of ruling from the Supreme Court on this.
Someone paying really close attention, apart from us, to that decision is Rick Woldenberg. Rick is CEO of Learning Resources and Hand to Mind. They're two educational toy businesses based near Chicago. Rick, back in April of last year, sued the Trump administration to invalidate the tariffs as exceeding the president's authority. Rick joined us alongside Bloomberg News Supreme Court reporter Greg Storr.
Well, tariffs have had a dramatic effect on our business. The imposition of these taxes on our company with no advance warning and with seemingly no limit threw our supply chain administration completely out the window. We had to rebuild our supply chain on the fly. It was a significant disruption in how we manufactured our product. And so we had an enormous diversion of labor in our office. Maybe up to 30% of our man hours were shifted towards surviving that change. Also, obviously, created a huge cost, well in excess of $10 million in 2025, up from zero in the prior year. And so it affected our cash flow, it affected our costs, we had to raise our prices, and it's an economic depressant. A massive tax like that, it's like wearing ankle weights in a sprint. You slow down. And so we're a little smaller as a result of this huge tax.
So, Greg Storr, I want to bring you in. This is a great story, as you do so well, and it's I feel like how Bloomberg does it, like reminds us that there are big stories, there are headlines, but there are people and companies being impacted. And in this case, a lot of small and mid-sized companies. I think it's safe to say that Rick's story not unique.
It's not unique, and in fact, it is the smaller companies that have launched this challenge. There are two different cases that are before the Supreme Court, and the other one's also small businesses, actually smaller than Rick's. The bigger companies, while they have subsequently filed some lawsuits to try to get refunds in case the Supreme Court strikes down the tariffs, they didn't want to be out front in challenging these.
So Rick, why did you choose to speak out? Why are you speaking publicly about this? Why did you file this lawsuit? It doesn't, yes, there's certainly upside, but there's also a lot for you to lose. Like, we've seen the way that this administration has been punitive in some cases.
Well, I think that the things that I was afraid of losing were the relationship I have with our customers, the dependence that our employees and their families have on our company. Ours is a family business. I'm third generation, my kids are fourth generation. You have a very strong sense of how the health of your business affects the community that you live in. And so we just couldn't walk away from those folks. And I'm very American in my outlook. I want to take control of what's happening to us, and I wasn't going to let a politician ruin what we built up over 100 years. We're also a mission-driven business. There's lots of families like yours who use our products and depend on them to help educate their children, and that means a whole lot to us. So we felt like we had a lot of reason to stand up, and I was more concerned about not doing something than doing something.
You know, the president, Rick, in Detroit said, quote, "To be anti-tariff is to be pro-Chinese, and the tariff challengers at the Supreme Court are China-centric." And he alluded to the idea of people who are challenging tariffs as anti-American. How do you respond to that?
You know, one of the things I've done in this lawsuit is I've tried not to go tit for tat and to point fingers. In saying that, Mr. Trump points fingers at me, but I'm not sure that I make my point more strongly by engaging in finger pointing back. I would just simply say that Mr. Trump has no legal right to have imposed this tax on us. It's hurt our business, and we've asked the court to adjudicate that. He has no right to do this, and no American wants to or feels exposed to the risk of paying a tax that's not legal. There are means for him to put taxes on us. He has to go through the House. That's what James Madison wants, and that's what we need to do. So he can't do it. He has no idea if we're China-centric or not. I would tell you we're child-centric, and we're trying to help children get a great start in life. That's our orientation.
Yeah, what a story, a stark story. And Greg, you know, I look at your story on this, and you say and you remind us that the president has wielded tariffs to try to get Canada and Mexico to crack down on illegal immigration, Brazil to drop the prosecution of ex-President Bolsonaro, and India to stop buying Russian oil. He has used this tool a lot in this administration in this first year. Come on in on the conversation, and you know, you brought Rick to us. I'd love for you to ask Rick a question as well.
Well, Carol, one thing you're pointing out there is that the tariffs that he has imposed under the law that's at issue at the Supreme Court, known as IEEPA. There are other tariff authorities that he's used that are not before the Supreme Court. And so actually my question for Rick is, you know, the president has said that even if he loses a Supreme Court case, he's going to turn to these other authorities and try to replicate the tariffs. And I'm actually really interested in terms of your business. How concerned are you that even if you win at the Supreme Court, you're just going to see a whole different variety of tariffs, maybe ones that force you to kind of shift your business plans again and shift where you're manufacturing some of your products?
Of course, that's a risk, and Mr. Trump has a track record of changing the rules on a very rapid cadence, which makes it hard for us to run our business. It's a little difficult to respond to like what he might do or what he might not do. All of the other provisions in the law that give him the right to impose tariffs come with a lot of strings attached. So it requires a lot of fact-finding, hearings. It's a slow process. He can't do it by fiat. He can't do it by True Social tweet. So I think it's better to wait and see like what he actually does. I'm not aware of a legal mechanism where Mr. Trump can be a taxing body. He's not allowed to do that. The Constitution is quite clear on that. So as much as he wants to do it without going through Congress, he can't. The law says he cannot. And so I don't want to overreact to threats made on TV. I think the Constitution provides the answer to that. Ultimately, at the end of the day, it's going to be a lot harder for him to build a tariff structure going around Congress. The law doesn't provide for it. And so we'll see what he does. And when he does it, we'll figure out how to respond.
Rick, the story that Greg wrote back in November talks a little bit about in the beginning of this kind of game of whack-a-mole of moving production from one country to another only to find the tariffs have been imposed in this country. Also, that was China to India and the like. At the end of the day, the president wants tariffs because he wants this stuff made in the U.S. So is there a way that you foresee in the future you could ever just make all of the products, or a good portion of the products that are made overseas right now, you could make them in the U.S.?
Certainly no. And I've answered the questions many times. The answer is still no. And there's no evidence in the marketplace that anyone really disagrees with me. I think, unfortunately, the way this is being dealt with is that our industry and companies like ours are considered a sacrificable rounding error. They don't really have any idea what we do or how we do it. They want cars made here, they want cell phones made here, they want chips made here, and so they've come up with one rule. That's what their intent is. They want to bring back pharmaceuticals. And like, if something bad happens to us, it's not really their problem. We don't move the needle economically, and so they don't care. And I don't think they care about our employees, and I don't think they care about your families who use our products. We're rounding error. And I just can't look at the people who work here, the people who use our products, and say, I think you're a rounding error. I don't.
Yeah.
And I think that we create great jobs. Greg has been through our facilities. He can tell you that, like, we're a massive consumer and user of technology. I think that our businesses and the way we run our business is an exemplar to other companies. We are what you want here. We just don't make a high-tech product.
Yeah, Greg,
I'm not sure I should apologize for that.
Greg, I think Rick makes a really good point. We talk so much about small and mid-sized businesses being the backbone of the U.S. economy and putting American workers to work, and he is certainly an example of that. Greg, we're now focusing on next week. Third time's maybe the charm in terms of whether we get the Supreme Court to rule. What should we be watching out for, and are we likely to get it? And just quickly.
Well, we don't even know that we're having opinions at all next week. We'll probably find that out on Friday. If we don't get the tariff opinion next week, the court's goes on a 4-week recess. They're not scheduled to take the bench again until February the 20th. Wow. And normally that's how they release their opinions. So if we don't get it next week, we could be in for a fairly long wait.
Are you surprised it's taking so long? Just 10 more seconds.
I'm not sure. I've been saying I still stand with this. I'm not surprised either way.
Okay.
The court has tried to expedite it, but this is a big case. It's going to take a while.
All right. So appreciate it. Great story, as always. Greg Storr, Bloomberg News Supreme Court reporter, and Rick Waldenberg. He is CEO of Learning Resources and Hand to Mind, a favorite of Tim's kids, it turns out.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
There's no chance that you're going to have that kind of problem. But there are chances you'll have a problem somewhere, somehow. The biggest unknown is geopolitics.
JP Morgan Chase CEO Jamie Dimon this past week with Bloomberg host and Carlyle co-founder and co-chair David Rubenstein at the U.S. Chamber of Commerce in Washington, D.C.
JP Morgan, by the way, featured very prominently in a new book out on the 1929 market crash. And this feels like kind of the right conversation to be having at this moment in time when certain investing narratives dominate U.S. financial markets, AI, private credit, transparency concerns, crypto, prediction markets, and more. Questions about whether these narratives are the right ones that lead to longer-term gains and prosperity for investors and for the country. There's a lot of questions out there.
Yeah, stuff about exuberance as well. Could it lead to a crisis or to a crash? It does lead us to 1929, a book that takes us inside the greatest crash in Wall Street history and how it shattered a nation. The book by New York Times bestselling author of Too Big to Fail, who also happens to be an award-winning journalist for the New York Times. He's the founder and editor-at-large of DealBook. He's co-anchor of Squawk Box on CNBC. Andrew Ross Sorkin joins us now. Welcome.
Thanks for having me, guys.
Yeah, thanks for joining us.
Great to be here.
You know, it's funny. Jamie Dimon was asked about just now by David Rubenstein about the financial crisis and about whether or not we could have another big financial crisis. Our question for you is, in this day and age, could we have another 1929-like stock market crash, or is the structure just completely different? Are the protections now in place? Could it happen again?
So yes and no. I can explain why no, and then if you'd like, I can get you there. If you want to go there, look. The good news is the world is very different today from a technology perspective. One of the reasons that 1929 ever even happened was literally the stock exchange was oftentimes off, meaning the numbers that you saw on the big board were 3, 4, 5 hours behind the actual numbers, and as a result, people were just selling indiscriminately because they just thought the whole thing didn't even work. I mean, one of the reasons you always see those famous pictures of people down the New York Stock Exchange in 1929, the reason they're there, the reason they're all in the street is these are people who've come from all over New York and the rest of the country to try to find out like what's happened to their money. So That piece of it you take off the table because you can get the numbers right here and off of your terminal and everything else.
Right.
There's an SEC. Insider trading is not legal. It was legal then. So all the manipulation that was taking place. There was no FDIC. So you had bank runs that took place in the aftermath of this crisis. We could talk about Glass-Steagall and what that either represented or didn't, or whether you think it's come back or not. But here's a bigger one. Capital requirements for banks. Mm-hmm. There were none. Zero back then. So there's a lot of reasons you'd like to believe that we can't have another crisis of the magnitude we did. And by the way, it's also worth noting, the crash in 1929 wasn't preordained that when that happened, that we had to have the Great Depression. That was really the first domino of a series of dominoes, and then a series of, frankly, terrible policy choices. The Federal Reserve basically doing nothing, the implementation of tariffs. We can discuss what that means today.
Right.
There was a gold standard, so there was a question about how much money you could throw into the system, austerity, all of that worked against things that led to 25% unemployment. Didn't have to happen, if you will.
I have to say, that was one of the things in reading your book that I was like, wait, I think there was just an assumption that it was the market crash that caused the Great Depression. So it was really
everybody thinks it's like there's one bad day,
right,
and then somehow there's a Great Depression. But there's so much in between.
Listen, so many people on your book tours, like everybody's like, can 1929 happen again? And I do wonder, is there a better, smarter question that we should be asking you, having done all this research and taken us back there, making us feel like we were in the room when it happened, that we should be asking you?
Well, look, it didn't happen.
Rather than can 1929 happen again?
I'll tell you, I'll give you actually how you could get to 1932 today, and that sort of maybe speaks to this. So, one of the lessons that came out of 1929, it was actually the lesson that Ben Bernanke learned when he was doing his great his thesis on the Great Depression at Princeton, is when there's a crash or a crisis or a panic, the playbook is to throw money at the problem. Maybe politically unpopular, but that is the lesson. And he did it in 2008, and by the way, we did it again during the pandemic. And I think we now think that there is a playbook, and by the way, there's also therefore a put on the market, because we now have the playbook. The one thing that's different this time is if you genuinely believe every financial crisis to some degree is a function of debt, too much debt in the system. So far, we're all talking about corporate debt, really. Back then, there was, in 1929, there was a budget surplus in America. Now we have $38 trillion. The question is, let's say we have a crash, and the government says, we're going to write a check for $5 trillion. That's the put. And whether you believe that there is some kind of invisible line that turns into a red line for the bond market, where they say, you know what, we like you guys in America. We're happy to lend you money at 3 or 4 times the rate that we do today, and that's the interest rate you're going to pay. And then all of a sudden you actually do get into some kind of austerity spiral, and then you're living at a 25% unemployment rate in the country. When you really start to try to get through the permutations, how do you get there? In this day and age, that's one way. The one other thing that's interesting today is the technology, as bad as it was then, in some cases could even be too good today. And I think we learned that with the Silicon Valley Bank failure, where someone goes on Twitter and says, I'm pulling my account. Now, that information is accurate.
Everybody does it over the weekend on their phone.
Everybody does it.
Right.
I used to think, this device is so great because if there was a bad piece of information, it could be corrected very quickly. But if there's a accurate piece of information, that's not good.
Right. People act on it quickly.
Well, so let's talk more about the technology today and sort of parallels and the idea of maybe irrational exuberance and signs of irrational exuberance right now. In reading the book in the 1920s, there was certainly a lot of that, but it seemed like it was more on credit and people buying on margin. Nowadays, there's the idea of crypto. Some of that has been kind of pulled back in just a couple of months, actually, since you published the book. We've seen some stocks fall.
There is a lot of debt in the crypto market. I mean, shocking amounts of leverage.
So there's that side of thing. There's prediction markets and sort of the money that's going into those, the excitement around those. The private credit and concerns about private credit that we've seen in the last couple of months. Any signs of anything there to you?
The private credit business has always concerned me because of the transparency of it, or frankly, lack of transparency. I think if you were to talk to Jay Powell, he would tell you that, even the Federal Reserve doesn't have a full grasp of how interlinked all of the debt and credit is in the private credit market. Having said that, depending on what numbers you're looking at, you could argue it's only $2 trillion. $2 trillion is a lot of money, but it's not the entire market.
It's not systemic.
So I don't know if it's systemic.
Right.
By the way, I might worry more today about short-term treasuries. I mean, by the way, the United States have been trying to sell short-term treasuries like crazy because we think that we can get a cheaper rate that way.
Right.
That's also a much more complicated place to be if, in fact, you actually have to pay it back more quickly.
One of the questions we were kicking around when we're thinking about having our discussion with you is Wall Street greedier today?
I don't know if it's greedier today. Frankly, I would argue greed. Look, I think
is greed bad necessarily?
I think the lesson for me of writing this book in some ways was that they didn't use the phrase back then, but this idea of FOMO.
Yeah.
Which, by the way, is driven in part by this phone and TikTok and people seeing all sorts of things. And by the way, I think makes inequality actually. I don't know if it makes it worse, but the perception of it and just the visibility of it.
Right.
But I do think the sort of FOMO, greed, envy, I think that's what's driven people for the test of time. And that's what it is. Is it worse today than it was before? I don't know, except, and maybe this gets to the inequality piece, I think there are more people who think that they're effectively unable to actually make it, and therefore more willing to take risk and more willing to sort of try to grab this lottery ticket as opposed to sort of make it over time slowly. So
on that, the ultra wealthy today versus the ultra wealthy back then. And reading the book, there's a lot of people have their yachts, and in some cases actually sailing to work in Lower Manhattan on the yacht.
Absolutely.
Today, the wealthiest people today, how much different are their lives versus the ultra wealthy back then? And not with the technology, but I mean what they were able to do versus what the normal person is able to do. I mean, you have billionaires going to space now.
I think there is a distinction, but look, I think you go back and. I think of J.P. Morgan's son. He was building the biggest yacht at the time. Mm-hmm. People would have thought that's like the Gates or Bezos yacht, whatever yacht you're thinking of. I think that there was a distinction, but I remember having an interesting conversation, oddly enough to drop a name, with President Obama. Interesting, maybe 2015, about the idea that, and I think this is true in the 20s, but really true even just 25 years ago, I think CEOs, people of means, were oftentimes living in the same neighborhoods with the people who worked on the factory floor of their companies. And as a result, their kids went to the same schools, and they went to the same temples and churches, and ran into each other at the same restaurants and markets. And I think that there's a cohesion there that's important for a culture. And I think that increasingly that has come apart.
We are talking with Andrew Ross Sorkin. The book is 1929, Inside the Greatest Crash in Wall Street History and How It Shattered a Nation. Politics got in the way of regulating banks and markets back then, and I think it was kind of fascinating to see some of that. Is there a parallel to that today when you look at the activities, Andrew, coming out of the White House on things like cryptocurrencies, regulatory oversight? I just wonder how you see that part of it.
I'll give you actually a parallel that may seem like not like a parallel, but to me is, which is we're all talking about right now the politicization potentially and independence of the Federal Reserve. I actually remember, as I was working on this book, looking at the diaries of a lot of the people who worked on the Federal Reserve on the board, and it was still such a new institution, born in 1913. That they were concerned about the political implications of either raising or lowering interest rates at any given moment. They actually cared about the politics. Now, it wasn't that Hoover was telling them exactly what to do, but they were so scared, not that they were just going to get hauled up in front of Congress for making the wrong choice, but that the entire thing, which people still called back then the experiment at that point, that Congress could effectively disband this very idea. And so I raise that only because it's clear to me that actually the independence of the Fed matters. And in fact, one of the reasons I think that they didn't act more forcefully in 1929 and in 1930 and after that was in part because there was their own concern about the politics, putting aside whether the White House was telling them one thing to do or the other.
Do we have that today?
I think less so, or at least up until recently, less so. I think that maybe in the same way that clearly those governors of the Fed back then were cognizant and nervous about the politics. I mean, I don't think this Fed thinks they're going to be disbanded, but I think that they're cognizant. They are very aware of what the president's saying, what their reputations are going to be like as a result, what people are saying about them, whether they have to do certain things to demonstrate their independence. I mean, that's the thing. The idea of demonstrating your independence effectively means you might even make a decision that might not be the decision you'd otherwise make, but you're doing it for your own reputation. So, yes, I think that all of that is not healthy.
Does the Fed keep that in a few months when Jay Powell is no longer Fed chair? And look, we can't see the future. We don't know who will be nominated.
I have a view that is maybe contrarian on in this space, which is there's a board, and there's a number of people on that board. I've never believed that the entire Fed is controlled by one human being. It just isn't. And so I think it's very important who is running it. I'm not telling you it isn't. But I do think there will be people on that board, those who care also about their own independence, who will. By the way, another reason I think Jay Powell may ultimately stay on that board for that reason.
I love that you went there, because I keep
we're hearing
wondering,
that a lot now.
Right?
Because we keep waiting. We expect to hear an announcement. It just keeps getting pushed off, and I just think I love.
No. By the way, it's not that I think that Jay Powell is going to be in this role for forever. They're going to let him stay. No, but just that he can stay for another 2 years after this.
Yeah, on the board.
On the board, and I think it is more likely that he will stay.
Yeah.
And in fact, to the extent that the president would somehow like to use that spot for somebody that he'd like to nominate, I would argue this whole thing has backfired. In fact, I was talking to Harvey Schwartz at the New York Economic Club yesterday from Carlisle, and he made the point, most taxi drivers, people in the street, didn't care about the idea of Fed independence at all a week ago. They didn't even know. I mean, this has been an academic conversation for the most part. Now it's like a thing. Yeah. And constituents across the country all of a sudden care about this issue. They may start to call their Congress. I mean, it's very interesting what's happening.
Yeah, I've shared this story before, but I was with a friend Sunday night he follows the news, but he's not in financial news or anything. And he picks up his phone. He's like, "Have you seen this video from Jay Powell?" I was like, "Why do you care about Jay Powell?" and that's how big of a deal it was over the weekend.
And so to me, that's why, in some ways, I think Harvey Schwartz is probably right. The idea of Fed independence may have actually become more important and potentially even stronger, at least in the short term.
Hey, I want to ask you about the process. I remember reading Too Big to Fail, loved it, and reported through it and was able to, I think, like you, talk to some of the people who were in the room when it all happened. I remember talking to John Mack on a panel, of course, formerly of Morgan Stanley, and getting that actual physical check from Mitsubishi. It felt like, you were in the room, like the way I read it.
Thank you.
Tell me how you did that.
Well,
what was the box of things that you got and you're like, oh my God.
So unfortunately, all of these people were not alive.
No. Andrew, really?
I spent about 8 years really, just combing through boxes and boxes of materials, some at libraries, some from families that were involved in this. Universities, I was able to convince, after a lot of knocking on doors, the Federal Reserve in New York to give me access to the board minutes. That was something that they haven't given out over the past 100 years. By the way, interesting, on their website today, you can get last month's board minutes. You still can't get the 1929 board minutes, but that sort of became a treasure map for me. But a lot, when you see two people talking to each other in a room, what's oftentimes happening is I'm finding a series of depositions, for example, where Charlie Mitchell, who's the main character of the book, ran National City, which becomes Citigroup. He would be interviewed in the deposition or in a civil case. There were also criminal cases where they would ask him, where were you when X happened? He'd say, well, I was walking down the street and I got to 65th Street. And what did you say to so-and-so? And I said such and such. And then they would interview his colleague and they'd say, well, you were standing on the corner. What did you say to him? And he would say, this is what I said. And then they'd interview his wife. And so though all of those quotes are real, and then oftentimes I would go and try to find either the architecture plans or a photograph of the room, so I could really try to put you in it, and I'd try to understand what the weather was that day and what whether it was light out or not. All of these sort of little things, so that again, if you're trying to, as a narrator, you can sort of feel like you're there.
Right.
Was there a time when you were, in some sort of archive over the last 10 years doing this, where you got this sort of treasure trove of correspondence between two people, and you were like, okay, this is what I needed. This is the ticket. This is going to illuminate.
You know what? It was it was like,
or is it just so piecemeal?
No, it was like it would either be raining like you're in the rainforest and it was fabulous, or just like the desert for
There's nothing.
months. And because you'd go to these places looking for stuff, and then you'd go through all these boxes and there'd be nothing, and then you'd be so depressed, and then magically something would happen. I mean, I will say there was one moment for me still that I think was just like a true aha, which is one of the main characters of the book is Carter Glass, of course, Glass-Steagall. He was a senator in Virginia. And I think I had an impression going in, today it's often that bill is often held up by Elizabeth Warren and other people as this sort of pure effort to really break up the banks for all the right reasons. And I found a trove of correspondence that showed, I think, maybe for the first time, that, in fact, parts of that bill were actually written by another banker trying, frankly, to screw over J.P. Morgan. And you think to yourself about, money in Washington and lobbying, and I thought, the good old days, they didn't do things like that. And it's no different.
Yeah, exactly. What?
I want to talk about Evangeline Adams. She
I
seems
love
to be
Evangeline.
I love
Evangeline.
That's the character that everybody wants to talk about. Well, we should explain who she is for people who haven't read the book.
Evangeline Adams is an astrologer. She had an office up at Carnegie Hall on 57th Street, and every banker in town would go visit with her. She had a newsletter. I mean, I like to think DealBook is successful. She had a newsletter with 100,000 subscribers back then. People would go visit with her. They'd pay $50 an hour to sit with her. And she would ask her what's going to happen to the stock market, and she would tell them, and they would go off and make their trades. And it was she's just an unbelievable character to even believe that something like that existed, and that serious people were, really engaged with what she was saying and doing.
It was almost like she was a confidant for some of these people, which was pretty surprising to me.
I almost think of her as a psychiatrist.
Like a therapist.
A therapist for people back then. Yeah.
Yeah, I mean, just the similarity is like I think about kind of the Wall Street South that existed, right?
Yes.
Folks in Florida, and we have that today. And
Palm Springs. I mean, when I learned that Mar-a-Lago happened to be owned by who? E.F. Hutton, which was just such an indication of what was going on in America at that time. And by the way, E.F. Hutton had also moved in, I don't know if you saw, to the Plaza Hotel, the famous Oak Room, which is a bar.
Right. Where
during Prohibition had become a brokerage house.
So do you feel like you have a better understanding of what would cause, like Jamie Dimon said, we may not get another great financial crisis, but there will be a problem.
Right.
Like, do you feel like, I think because everybody keeps saying, could we get this again?
Yeah.
Like, is it likely, or do you get a better indication of like what we should be watching out for in terms of what marks? Is it leveraging? Is it credit?
I think it's always leverage. It's like a one-word answer. It's probably boring. Leverage is the match that lights the fire every single time. You could have all the bad actors you want on stage doing all the bad, greedy things you could possibly imagine, but if there isn't the leverage piece, it's very hard to have a true systemic problem. I was shocked to know that at the end of 1929, the stock market was only down 17%. And I actually think it was a head fake for a lot of politicians who were looking at the market and saying, looks like things are better. Yeah. But most people didn't appreciate that during the 50% downdraft that had happened prior to that, it wasn't just that equities had fallen 50%, is that people had taken out loans, oftentimes 10 to 1. So they didn't just owe what the equity was that had fallen. They were getting margin calls saying, you got to sell your house. And it's that. And I think we saw that again in 2008 with the subprime crisis. And I mean, it repeats.
Well, it's funny, the Joe Kennedy thing about like, when is it your shoe shine guy, right? Yes. And I always think about before the GFC, being on a yoga retreat in Mexico, and everyone was talking about buying real estate. And I thought, this is just weird. Like those little snippets of things as an indicator that things are just exuberant, irrationally perhaps. Is that fair?
I think all of these are...
With all the data that we have, right, to look at the markets.
I think all of these are red flags being thrown on the field.
Yeah.
But just because maybe I should say yellow flags being thrown on the field. And the question is, when do they turn red? And I think that's the hard part to know. Famously, here we are, started this segment coming out of Jamie Dimon's interview. In 2008, his daughter had come to him as this was all happening and said, Dad, what's a financial crisis? And he said, it's something that happens every 7 or 8 years. And so I think the truth is, check your calendar. We might be due.
We're speaking with Andrew Ross Sorkin, author of 1929, Inside the Greatest Crash in Wall Street History and How It Shattered a Nation. Does Herbert Hoover get a bad rap?
So I have maybe more empathy for Herbert Hoover than others. It's not that I think he made the right decisions. In fact, he made a series of very poor decisions. It's just that I think, at least historically, the narrative that's been described about him is that he didn't even understand what was happening. I think he understood very well what was happening. I think he had some of the wrong people in his ear, including Andrew Mellon, who was his Treasury Secretary, who had a terrible, unfortunately, relationship with early on. I think his decision on tariffs was completely misplaced. Why did he do that? He did that, by the way, for political reasons, because in 1928, as he's running around the country desperate to get farmers to vote for him, he's pledging to them, vote for me, I'll help you.
Wait. Are you talking about 2020?
But when he hits, and by the way, 1930 rolls around, every economist in America, all the bankers are saying, please don't do this, Mr. President.
Right.
And he says, well, I have to do it because I pledged to these folks that I would. So you see this sort of repeat things. And it's not that he didn't know what he was doing. I think he just didn't understand. He was also, unfortunately for him, a terrible, terrible communicator.
Right.
And I will say, maybe this is true of all presidents. He had this view that he could somehow jawbone people into believing that things were better than they really were. And I think we're seeing that now. By the way, we saw it in the last administration. That is a bipartisan tactic by the White House.
What's your biggest takeaway from doing this? My understanding is you wanted to do this because people used to ask you, 1929 versus 2008. But you tell me, what did you get out of doing this?
I mean, selfishly, I felt like I now understood what actually happened just as a student of history. I actually just genuinely wanted to really get it. I want to know who the people were. I wanted to understand their incentives, what their motives were, why they were doing what they did. And I think ultimately the truth is that we are all human beings. Maybe it's FOMO, maybe it's envy, maybe we all want more, and that's, for better or worse, what seems to drive people. And then the question is, when people get a little too confident, can you have the humility effectively to step back and realize that maybe that confidence could be misplaced?
You write that the antidote to irrational exuberance is not regulation by itself, nor skepticism, but humility. The humility to know that no system is foolproof, no market fully rational, and no generation exempt. Do you see that humility out there today?
Well, I said it better in the book than I just said it now.
And we have the full screen for it, too.
Do I see that humility today? I see that humility among some. Look, I think, we also talked about Warren Buffett. Jamie Dimon and David Rubenstein were talking about Warren Buffett. I think Warren Buffett has a remarkable humility, and when it comes to sort of even his own confidence, he has humility about that. I think there are a number of business leaders and investors who absolutely do, and then there's a number of business leaders and operators and investors who clearly don't. And I think anybody who walks in the door and sits down at this table and can tell you exactly what, or thinks they can tell you exactly what's going to happen, probably can't.
I think we have to leave it there. Thank you so much.
Thank you so much for having me. I appreciate it.
This was a lot of fun.
This was a ball.
Yeah, we really appreciate it. Andrew Ross Sorkin. The book is 1929, Inside the Greatest Crash in Wall Street History and How It Shattered a Nation. I learned a lot.
Yeah, Andrew, thanks so much for joining us.
Thank you.
Appreciate it.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Plenty ahead in our second hour of the weekend edition of Bloomberg Businessweek, including skiing outdoors and indoors with the CEO of Snow Partners. You've done both, haven't you?
I have, yeah. I've been to Big Snow at the American Dream Mall once.
Did you actually ski down the slope?
I did, yeah, but it's a great place to bring kids.
Yeah.
Not super steep and very short, of course, but guess what? It's open in the summer.
And it was fun.
It was fun. It's never
summer.
not fun. Plus, from Japanese prime beef, star chefs working the counter, and large format martinis, we've got the most exciting U.S. restaurants to check out this year.
Also, why some top chefs are turning your leftovers into tasting menu gold. First up this hour, prediction markets. They are being fueled by platforms such as Kalshi and Polymarket, where users make predictions tied to real-world outcomes, but you can kind of bet on just about everything.
The idea is simple. Prices move based on collective relief, turning crowd sentiment in a real-time forecast and sometimes big money on the line.
A recent Bloomberg Big Take highlighted how prediction platforms are pitching themselves as tools for insight, but eye-catching bets on real-world events are raising questions about access, integrity, and regulation.
Bloomberg spoke with economists, U.S. politicians, and heads of trading firms and hedge funds to understand really what's at stake in the prediction markets boom. Denitsa Sakova and Lydia Bayud are part of the team behind the story. Denitsa is Bloomberg News cross-asset reporter. Lydia is Bloomberg News financial regulations reporter. Denitsa here in our Bloomberg Interactive Broker studio. Lydia joins us from Bloomberg's Washington, D.C. bureau. Lydia, I want to start with you in Washington because you cover financial regulations. Prediction markets, is it fair to call it gambling?
I think these days people increasingly are seeing a blurred line there. To your point about marketing speak, the companies are very keen to describe themselves one way, but certainly within Washington, I don't think a lot of people are seeing much of a difference. And for sure in the sports gaming world, they see them as direct competitors.
Yeah, it's interesting. Gaming, gambling, what exactly is this? Denitsa, come on in. For those who maybe have been, living under a rock, which is kind of fine. I like to kind of hibernate every once in a while. Remind us what these prediction markets are all about and who are the big players.
Yeah, 2025 was the year of prediction markets. We had two big firms kind of dominate the space. Of course, Kalshi and Polymarket. Their valuation went through the roof. They started from like 1-2 billions and both ended the year in the double digits of billions. So really, really rapid growth. And we're seeing not only those tech Silicon Valley names, we're seeing a lot of traditional finance names. We're seeing CME, we're seeing a lot of those traditional finance players getting involved in the space. So clearly this is an interest more beyond Silicon Valley. The volumes are crazy.
But tell us how it works. Like, can Tim or can we go out and place a bet? Like, who determines who can do what on the platform?
Super simple, super easy. So obviously sports betting, you have to be 21. For this, 18 is enough. It's very accessible. You go, the bet is like as cheap as like a few cents or $1. And
you just go and create it on
anything. It's very simple. Yeah,
you can create the bet.
No, you cannot create the bet. You can place a bet.
That's what I'm asking.
Yeah, there is a way to claim a market, but of course it's up to the platform to create. But as we have seen in recent months, there is a lot of variety of bets on things that anywhere else you cannot bet, from the bet on Nicolas Maduro being outed to any type of pop culture thing and any type
top artist on Spotify this year is on Kalshi right now.
Of course, that's very popular. Any type of mention market. People are watching like politicians talk on TV and betting on every word they say, every twist. Like, people are even making fun of this. We famously had the Coinbase CEO knowing that people are watching what he says on the earnings call, so he was crashing the market.
So that's where I want to bring in Lydia, because when you're in a world, Lydia Bayud, where there is one person in control, like a CEO of a company, like Elon Musk, if the number of tweets that he sends between a certain period of time, that's a bet on Polymarket right now, or a prediction on Polymarket that one can make. What is the slippery slope that opens when one person is in control of the outcome here?
So that's something that I think regulators and policymakers are really grappling with. Particularly, I think the Maduro example that we highlight in the story has really made that so salient for everyone. Right now, generally, federal rules prohibit federal employees from trading on non-public information for their own financial gain. I think Representative Richie Torres is planning to introduce legislation, if he hasn't already this week, that would very clearly prohibit that type of trading on prediction markets. But really, we're kind of facing a different regime compared to how I think a lot of people think about insider trading that is regulated in equities markets or markets overseen by the Securities and Exchange Commission. Because, if you're in the derivative space and you are an energy producer, an agriculture producer, you're expected to trade on knowing, my crop's really great this year, or we're pumping so much oil and gas out of the ground. I'm able to hedge my position and sort of let my knowledge that I have inform both me and then the market. There's kind of a market utility argument that is made in those traditional markets, and we're seeing that, again, sort of these blurred lines shift into prediction markets, and people sort of grappling okay, well, what's okay insider information? What benefits everyone to have insiders trading and kind of, as they like to say, drawing on the wisdom of the crowd and doing price improvement, but
so not exactly truth machines, right?
Well, that is the big debate about how are you going to draw that line about, if you are Elon Musk there are mention markets and what you might say during your, not to pick on Elon, any executive.
Right.
And you're going to, there are mention markets on what you might say in your quarterly call. Do you swing a market just for funsies? Do you swing it knowing that, your buddy's buddy might have some money riding on the line? And then how does anyone catch that? Should they be catching it? There's so many open policy questions that are being asked, I think, around Washington right now because of these markets.
Yeah, there's an interesting, I'm just going through call sheet. You could spend, I know both of you did this, like you can spend hours going through this, but like, does it really serve the market, Danitza, to ask if will Taylor Swift and Travis Kelce be married before January 1st,
That's
2027?
important stuff, Tim.
It is important stuff. We had a lot of Bloomberg headlines on this as well. But
Did we?
We did have
Okay, I didn't know.
But it is important. So what a lot of those prediction micro believers says, we're going to bring a lot of people through sports. So for example, Kalshi has 90% of their volumes very often coming from sports. So it's pretty hard to make the argument that this is a truth machine at the moment. But what some people hope and believe is that eventually some of those casino elements, some of those betting elements will bring people who want to bet on things like economic data, things like maybe people want to hedge. Like the hedging scenario is something that has come up a lot. Talking to people, it seems like it's not coming anytime soon, but people are saying, oh, maybe I want to hedge the weather in Florida. Maybe I have a house and I can buy insurance.
Well, I don't understand that.
They keep going on topic, and I'm trying to take them off topic. Like, here's another one, for example. What will Rachel Maddow say during Jimmy Kimmel Live?
Right.
Okay.
That's a classic
Oil,
mention market.
Epstein, corrupt/corruption, ICE, Russia, Ukraine, affordability, healthcare.
All right, but there's serious stuff like the Fed decision in January.
Yeah.
89% say the Fed will
I find that actually helpful for what we do.
And we talked about this during elections and different things.
For sure. Elections have proven to be one pretty good
Help me understand, though, and, Lydia, come on back in here. One of the things I'm curious about is, like, who is checking, who is making these trades? Is Kalshi or is Polymarket, are they actually checking, especially when it could be potentially insider trading? Do they know exactly who's making these trades? Are they doing due diligence?
So these exchanges are structured as self-regulatory organizations, so they're supposed to kind of monitor trades and root out any potential for market manipulation. Again, the sort of where you draw the line between what's okay and what's not okay on insider trading, that's a judgment call, I think, except in all but the most clear-cut instances. But exchanges can self-report information to the CFTC. The CFTC can look into it. Again, it operates differently than the Securities Exchange Commission. But
what's the bandwidth for regulators to want to take this on?
The CFTC is chronically underfunded. They have, I think, roughly 500 staff. The SEC has four or five times, maybe 10 times that number, not quite, but they are understaffed for the task at hand, and there are more applicants. I mean, I think we mentioned in the story that there's a lot of interest driven heavily by sports trading, but also in the economics, also in other spaces. And so they're kind of underwater in terms of all that there is to do for market demand for this space. So I think a lot of people are wondering what the CFTC will do, but if we look at the new chairman, Michael Selig, when he was an attorney in private practice, he wrote a comment letter that was pushing back during the Biden administration on any effort to rein in sports prediction markets, for example, or really most prediction markets. So I think you've got someone who's very, he said he's going to defer to the courts on how the courts might eventually rule on this topic, but at least when he was an attorney representing clients, he was very much in favor of them.
Before we let you guys go, Danitza, if we think about the universe of prediction markets, Robinhood's getting into it. Kalshi and Polymarket are the big ones, and they count, I think, a Trump as advisors to both of those.
Yeah.
Are these all regulated the same way? or is one regulated differently than the others?
So also, obviously, they have the Trump as advisor, and Trump Media is looking into launching a prediction
Great
market.
point.
And a lot of the sports betting companies are looking to also get into prediction market. Kalshi so far is obviously under the CFTC. Polymarket is just entering the US. They have this beta test, so they're only onboarding some users. So currently, most of the bets on Polymarket are actually in this weird regulatory space where a lot of them are coming from abroad and isn't necessarily regulated. Under the CFTC, we've seen very different decisions. For example, there was a market connected with the United Care CEO killing, and CFTC asked Kalshi to remove that market, but Polymarket, who is not under that jurisdiction, actually kept the market. So you can see there are very different outcomes depending on the regulation.
Will a human land on Mars before California starts a high-speed rail? 19% chance. Costs 20 cents for yes, 85 cents for no.
Well, what counts as the high-speed rail?
I don't know.
Is it just like...
I'm just reading here.
Okay.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Yes, ski season is underway. This winter's snow story, though, has been all over the map. And as you keep reminding me, Tim, not so great.
Yeah, the Rockies, they've been off to a slow, dry start. Snowpacks near historic lows before recent storms helped open a little more terrain. The Northeast has seen more mixed conditions. Parts of Canada and Vermont are reporting solid powder days. But for those folks who went out west over the holidays, they were so disappointed.
That's a bummer. That's a big bummer. But I feel like we've been repeatedly or more often in the last few years hearing that story. All right, that's where Snow Partners comes in with an indoor ski resort. The company is keeping the slopes open year-round no matter what the weather does outside. Joe Hession is founder and CEO of Snow Partners. He joined us from the company's indoor ski slope, the Big Snow American Dream in New Jersey.
Yeah, we're having an amazing start to the season. The whole Northeast is having one of the best seasons in a few years. We have a La Nina type of weather pattern, which typically, means cold early. So the whole East Coast is good. Mountain Creek is doing fantastic. We're going to have full connection of all of 4 of our peaks by holiday week, which that's how we measure a great season. So it's early, but it's looking really good, and we're really excited about it.
How many people are showing up? I'm just curious about the kind of demand. We are watching the consumer so closely, and I'm just curious, What are you seeing?
Yeah, that's a great question. We're seeing great visits because of the great snow and the great conditions. And I'll be honest, we talk a lot about what's the economic impact of skiing. Many people, sometimes it's a higher expensive sport. And I'll tell you, in my experience in the industry in 25, 30 years, weather is the biggest indicator. If you have good weather, you have great visits. If you have bad weather, I've lived through the pandemic. I've lived through the Great Recession. And when you have great weather, you have great visits. And we're seeing that on the East Coast overall right now.
That's good. That's good to hear.
So your bottom line saying it's weather related. It has nothing to do with the economy.
Yeah, I spend more time in the fall thinking about, how are the squirrels acting and the Farmer's Almanac and things like that. I'm more worried about that than the economic situation in the country.
Okay, so Joe, you've got an interesting business because you operate these 2 resorts, one of them outdoor, one of them indoor. The one that you're in right now, I've been to this one, and it's a great place with little kids to introduce them to skiing and to teach them. Talk a little bit about what's going on at the American Dream Mall and just the stability there, because there are a lot of questions about the mall and the financial health of the mall. But are you guys okay, even if the mall as a whole is having a challenge?
Yeah, that's also a great question. We've been here since December 5th, 2019. We were one of the first tenants to work with 555, the people who operate the mall. And we've been successful every year since 2019. We've had constant growth from a revenue side. Our first year of opening, obviously, within 6 months was COVID and the pandemic. So we were a little slow on getting groups up, but now we have great group visitation. I'm very happy with the performance at Big Snow. And this is going into our busiest time of year where we're going to see really great visits. The mall overall, it's funny, back in 2019, I got asked that question all the time. And you might have been the first person to ask me that question in the last 2 years, because as you go through the mall, especially this time of year, it's really, there's a lot going on here, a lot of entertainment, a lot of new tenants have opened up. We're really happy here and we're really happy about the business we have here as well.
Okay, cool. So where are the people, and that's 365. You're there. You guys are open every day.
Every day. Well, we 364. We close on Thanksgiving Day.
Okay, that's the one day you're not open. How's demand there looking? Because it doesn't matter in terms of snow because it's all man-made. It's indoor. What does demand look like in terms of, is it cyclical? Is it stronger now than it was? Because that could give us a good barometer of the economy.
Yeah, the most interesting thing about operating a snow dome that's open year round is everyone thinks that it's going to be busy in the summertime because that's when other resorts are closed. But we're busier in the winter when they could go to other places. So when winter is on people's mind, when snow's in the market, right now we've had snow in Central Park already this year. So that drives tons of visitation because when it's cold outside, people just think winter, they think skiing, and that's where most of it comes. Springtime is our slowest time of year. Summer, slightly busier than spring, and then fall starts to ramp up with people from all over the country coming to get their first turns on snow.
Hey, Joe, I'm curious, what your cost equation is. We're in an environment where people still talk about everything costing a lot. We were talking with folks, representative of the restaurant industry, how they're dealing with labor and food and lack of immigration, and that is certainly impacting them. What's your cost structure look like right now?
Yeah, I think for us, definitely things when utilities get more expensive here at Big Snow, that's definitely a consideration for us. As far as labor, we've always, since we opened, we strive to be one of the top workplaces. So we've always paid a very competitive hourly wage to our team here. And then as far as guests and what it costs, at Big Snow specifically, we've tried really hard to take the barriers of why people don't try skiing in the first place. And we tried to take those barriers out of the equation. And those barriers are distance. So we're really close to the population here at Big Snow, but it's also the price of entry. So you can come and have a package for, well under $100. And that gets you a lesson, gets you rentals, all the equipment, outerwear, jacket, and your access on snow. So, but cost has definitely increased over the years, and that's something that we're always tracking to figure out how to become more efficient for sure.
There's been so much consolidation in the ski industry. You have Alterra Mountain Company with the Icon Pass. You have Vail Resorts with the Epic Pass, which kind of invented that in the early 2000s. Rob Katz and Vail doing that. You guys are independent though. How tough is it to be an independent operator in 2025, 2026?
I think it depends on the geography and where you're located. We're very lucky that both of our businesses are directly related to population. We do a lot of new visits. We have a lot of core local customers. At Mountain Creek up here in New Jersey, this is our 60th year of operation. So we have really good communities. People that learned to ski there in the 60s are now taking their grandkids to learn to ski. So for us, it hasn't impacted us, but people aren't deciding which way to go. And that actually brings up a really interesting point of, Vail, a huge fan of what Vail has done, a huge fan of what Alterra has done. We've also seen a lot of independence resorts come together with things like the Indy Pass. Mm-hmm. We actually released a new product this year with a bunch of partners called the Snow Triple Play, because we found out that we are really introducing a lot of people to the sport, and we can kind of give those people a warm handoff to other resorts all across the Northeast. So we've seen a lot of success in that.
It's really fascinating kind of going through all your business. You've got, I guess it looks like an app, manage your resort from an iPhone. I mean, talk to us about what the business strategy is and where's the real growth? Is it, creating more of what's behind you in other places around the country or even around the world? I mean, where's the growth or how do you create either organic growth or acquisition growth for your business?
Yeah, that's so when you look at Big Snow, we certainly want to expand and build more Big Snows. And I think the reason that is such a great opportunity is because you can design them to a spec, you can roll them out, and you can operate them really efficiently, kind of like the Jack Welch variation is evil situation. Without the variation, we can really figure out how to operate it efficiently. So Big Snow is really important in our future plan, but we are most excited about Snow Cloud, which you mentioned the technology. And you also mentioned earlier things like the Epic Pass and Icon Pass. Over the last decade, we've seen massive innovations with those pass products. But I think the next 10 years, the disruption in the ski space is going to be driven by technology. I think it's going to be the way resorts operate their business, the platforms they use to relate with customers. And I think the biggest change that's about to happen, which we've been excited about, is the AI piece, which I know a lot of people talk about AI and they don't see what that's going to look like and how that's going to feel. And the way we see it and what we've been building our platform to do is you should be dealing with your own family's agent booking anything. I think that's the way this is going, is everyone will have their own agent.
Yeah.
And if you want to go skiing, you're going to say to your agent, I want to go skiing. Where should I go? That agent will then broker with agents at different resorts. And I think it's going to completely change the way people plan trips, the way they buy passes. So I think in many ways, what we've seen with the Epic Pass and Icon Pass and other passes, we're going to see a complete change in the relationship of how people buy products, plan experiences, and it's all going to be hyper personalized. Like, yeah, I have this thing I always say is like, have my people call your people. That's like the joke that they've always said on cartoons, and that's the way I think people are going to plan their trips.
You're talking about agentic AI, right?
Absolutely, yeah. Agentic AI, where everyone has their agent, each business has their own agent. Different. Like I see a world in the next few years where it's not just Epic and Icon as the leaders. I think there's probably 20, 30, 40 flavors. The technology we're building allows any resorts to team up together, have different segmentations. It's really exciting.
I totally get it. Hey, just one thing I want to ask you, climate change, is that creating opportunities for you, especially when it comes to inside kind of ski experiences?
Yeah, you know, I think it's definitely easier to operate a business when you don't have to worry about the weather. You know, we have our outdoor resort and our indoor resort, and it's really easy to, what's interesting about operating Big Snow is it's kind of like retail, where I can literally predict what we're going to do almost every day because of it's so consistent. When you have, the changes in the climate and you have different variables, you need to be ready for what if we have a slow start like we're seeing out in the West right now? And I always remind people that you have to have a good pre-sold strategy. So Vail's done great with the Epic Pass. They've sold them. Same thing with Alterra with the Icon Pass. Resorts know how to make sure they protect themselves early. And I always tell the skiers I have a bunch of trips planned out West this year, don't judge the early start for the whole season. This could still be an amazing season out West. I was at Jackson Hole on Monday. They're getting a massive storm this weekend. So, I wouldn't give up on the season on the West. I think we have good ski days ahead of us.
Hey, Joe, to Carol's point about other parts of the business, if we think about Snow Partners and the umbrella organization, how much revenue comes from actual operations of Big Snow and Mountain Creek versus SoundCloud snow operating business and SnowGo, the bikes that you manufacture and sell?
Yeah. So revenue-wise, we're probably... so high level, think of like 100 million in revenue. We're doing 60 in operations at this point. The rest of it is primarily focused in SnowCloud, our software technology. As far as where the growth opportunity we think SnowCloud is going to be the Shopify of experiences. We work with Stripe on our platform. We're really lucky to be one of their category leaders in the space that we're in. And I think we can see growth with SnowCloud that's not just in the ski business, but water parks, amusement parks. I feel a way that Shopify has opened up the doors for people who want to be in retail at all sizes and levels. I think that's what we're truly trying to build with SnowCloud. So that right now is not our largest business, but I always tell people it is by far our largest opportunity.
Just going to say, I love the Mountain Creek Water Park. Did that with my daughter. It's pretty wild. It's pretty wild. I actually had the wind kicked out of me out of one of the rides, but it was a lot of fun.
That's how you know you had a good time.
There's no water park like that in the world. One of a kind.
It's crazy.
Joe, appreciate you joining us. Joe Hession, founder and CEO of Snow Partners. I'm going to see him on the slopes.
Yeah, you should try the water park. It's wild.
Love to take some turns. Thank you for
cool.
Take care.
All right, we'll see you later. Joe Hession, founder and CEO at Snow Partners.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
A new year, and get ready to step up to the counter for some of the year's most anticipated cooking. We're diving into the U.S. dining scene, and things are getting deliciously creative.
From some of the most exciting new restaurants opening this year to turning waste into tasting menu experiences, with more as Bloomberg Pursuit's food editor, Kate Crater. Kate, when I was reading the story about the counters, I brought myself back to this fall, late summer. Sebastian, who's in the control room right now, Carol, who's right across from me, next to you. We were in Southern California. We were in Orange County. And my sister found out we were there. She said, you have to go to this one restaurant. So I was so excited because whenever we travel together, we try to do like one really nice meal together. It's like a highlight. We go to the restaurant. We walk in. It's counter service. And we all look at each other and we say,
No.
this is not the experience we want tonight. Did we make a horrible mistake?
So that was 2025, and maybe your reaction will be a little bit different if that scene is recreated in 2026, because it is going to be a big trend. There's so many fun restaurants opening around the country this year. One of the big trends that we're seeing is counter service, where you do have to do some of the work yourself. You walk up, you order. You should be sitting at a table. If they had you standing up, then that's not ideal. But
we just walked in and walked out.
You walked in and walked out.
We just felt like it was not going to be as nice.
Well, it's not. There's definitely something missing from it. But the reality is, I mean, you guys go out to eat. You know what a good restaurant is. Eating out has gotten so expensive. It's crazy. I mean, it's been coming for a while, but especially here in New York, you know what? You can't like walk into a restaurant and order a burger and a drink and not get a check that's like $100. You know,
it's
and
crazy.
So it's crazy.
Yeah.
It's crazy. I mean, it's based on reality because, as you know, food prices are going up, labor prices are going up, real estate isn't free in New York City. So there's a lot of factors going into it. But nonetheless, I think the sticker shock of it is starting to set in. And certainly, you know, at the margins for restaurateurs are slimmer than ever. So they're like, how do we make this? How can we cut costs? And so what they are doing now is they're increasingly looking at counter options, because it also fits like the comfort food mentality. So it allows you to cut back on labor a little bit. It can streamline a restaurant design because you don't need like a lot of places to set up to have like servers putting things down. So yes, I predict that in 2026 you'll walk up to a counter, because they're also going to be really cool in Chicago. This guy who's like a barbecue champion is opening Fatback. In New Orleans, Alon Shaya, who's a really a celebrated Israeli chef, is opening Safta's Table, and he's going to serve food all day long. And then it's also happening in D.C., a place called Rye Bunny. It used to be a restaurant called Tail Up Goat that was fantastic. It opened a decade ago, and these are some very talented restaurateurs, and now they're saying, you know what? Let's go to a different model that's sort of like modern American cooking, seasonal menus, and it's going to allow us to keep our prices a little bit stable instead of ramping up.
I loved reading the decor of this one: rag rugs, patchwork tile floors, and string lights. Like it just sounds charming to me.
Carol, you're going to walk in there and not walk out. That's my prediction for 2026.
The one thing I also thought was kind of interesting is at Maze in Denver, it's 18-course menu, and you move through a series of spaces. I thought that was also kind of interesting.
Isn't that cool? Yeah. I mean, that is, don't think like tasting menus are dead and gone and that you're only going to be able to eat at a counter. There will be opportunities for you to sit down and have some really elite kind of food, and that's happening in Denver. This couple, Johnny Curel, I think, and his wife have really spotlighted Mexican food and authentic ingredients, and so they're obsessed with maize and corn, and so they have started. It's sort of an experiential dining experience, and I think that's really fun. That makes me want to go to Denver to eat.
I want to talk about everything omakase. I feel like
you're listening
no matter
to
where
the
you go, whether
Bloomberg
you're here in New
Business
York,
Week
whether you're in
Daily
San Francisco,
podcast. Catch us
it's hard
live
to
weekday
actually find sushi
afternoons from
that's
2 to
not
5
omakase,
p.m. Eastern.
or an
Listen on
experience that's
Apple
not
CarPlay
omakase
and Android
these
Auto
days. Does that
with the
continue into
Bloomberg Business
2026?
App. Or
I think it
watch
does.
us
Yeah, there's
live on
definitely
YouTube.
a lot. There's still a sort of faucet of high-end Japanese sushi masters and Wagyu chefs who see a lot of opportunity in New York and Miami too, and who are opening restaurants here. So you will continue to see omakase. I will say I'm really eyes on. I think people are cutting back on going out and or will cut back on going out. And so whereas like a year or two ago, we would see some of these omakases priced at like $4.95 or $5.95. And that means you're spending like $800, right?
Oh my God.
Tim, if you take me and Carol out, you like get ready.
No, I have to tell you guys, I was in San Francisco last year for a week, and one of the things I wanted to do was just go to some good restaurants. So I texted a friend in San Francisco. I said, I just want really good sushi. Where do I go tonight? And he texted me a list of like 5 places. I looked up every single one of them. They were all omakase only. And let's just say my managers would not have been happy had I expensed a meal at those places.
No, I think now, I mean, it's still, obviously you're going to spend 3 figures on these menus, but I'm seeing a little bit more like $295 and low 300s, which is still so much money, but it's like at least it's like 2/3 of what it.
I think you're going to be taking us there, Kate.
Let's go.
Well, gosh, I feel like, Kate, we've talked to you. I just want to just go big, broad, if I can, for a moment, because I feel like we've talked with you through so many different cycles, and we've had good cycles, and then we had the pandemic, and everybody had to shift. Like, what was last year like, and where is the restaurant industry in some of these major cities?
It's such a good question, Carol. I think if I look especially at New York City, because that's my home and it's the most exciting food city in the world, I will say that. I think everything was on the front burner. There was so much happening with like, go here, do this, go to the corner store, go to Teresi. It seemed like a constant highlight reel. And there's still like so much of that YOLO mentality where you really feel like, I'm going to do this. Like, I've got to have like a corn experience tasting menu. And I think this year is the year that we step back a little bit and things dial down a little bit. New York City feels a little bit more lived in.
Yeah.
And you go, like, you keep supporting something that happened right after the pandemic is that people really supported their neighborhood restaurants. And then there was all this pent up energy, though. And so it went from maybe supporting your local restaurants, but really going big to the places that you saw all over social media. And I think that calms down now. I think the places, the biggest restaurant opening, and it's not on our list because it opened at the end of last year, but it's called Stars. It's a little wine bar. It's on East 12th Street. It's like a horseshoe counter. It was apparently inspired by Grand Central Oyster Bar, except that it only seats like 20, like you only like 20 people can fit in it.
Yeah.
But it's a wine bar with a fantastic array of snacks. They have these deviled eggs that have been getting a lot of attention with these little pastry stars on them. They have a shrimp sandwich that's bananas with like a really good crusty buttered griddled bread on it, surrounding these like plump shrimp.
I love this.
And you can walk out of there for like maybe $100. Like maybe you'll spend $100 if you're drinking some really good glasses of wine, but you can also go out of there for like $60 and then go have dinner somewhere else or go home and cook your dinner. And I think we've written about that before, but wine bars are like here to meet your economic moment. And New York City hasn't done wine bars so well, and now it starts now.
Can we talk some trash?
Yes.
Okay.
Love this story.
Yay. Love talking trash.
Love this story. So
I was reading this story by Emma Court. Kate Crater edited it, and I was reading it and I was thinking, this is so up Carol's alley, because Carol's not somebody to waste anything.
We try not.
But we talk a lot about just personally how much food goes to waste, like, spoiled salad in the fridge, we end up throwing it away. This is a huge issue for larger establishments like hotels and large restaurants too.
Food waste I'm so with you, Carol. It makes me nuts, and it gets wasted on every level. It gets wasted in your home, but it especially gets wasted in kitchens and commercial operations, and it happens at every stage. It happens when you're preparing food and you throw out trimmings. There's plate waste that also has a lot to do with it. I'm interested to see how that evolves with as more and more people are on like GLP-1 drugs, and because portions I think are becoming like a little bit more reasonable, because at least here in the US, and so hopefully that plate waste is going to decrease a bit. But there's the restaurant in the East Village called Hags that you can pay up to $160 for your food, but the chef specializes in maximizing her trimmings. Like, she grows mushrooms, like she uses the compost in her kitchen to grow mushrooms that feature in like a beautiful like risotto, and she's using like squash trimmings to make like the soup, and every single thing that you can think about that you and I might throw in the garbage, she's like, nope, like I see other opportunities.
I think it's brilliant, because if you think about, right, sometimes to create something, especially at a really nice restaurant, like how much food either they're cutting away or so on. But it's also like this whole area of companies that have come up, if you will, to help these restaurants like monitor their food and so on and so forth. So there's this whole other industry, cottage industry or whatever you want to call it, that has popped up.
Well, it's so smart. Yeah, there's a company called Winnow that analyzes, it uses some proprietary technology to analyze the trash and see what you might might be able to use. And I think they've been working with some big hotel groups like the Four Seasons, and now the Four Seasons Houston, I think, was making like a quesadilla or something that ended up being 70% waste. That isn't that fantastic? Like, it saves them money. It's better for the environment, all of it.
It's not just customer plates, though, that where the waste comes from. That's about a third of the waste, according to this story. This is the Waste and Resources Action Program data. But 45% of it comes from food prep, 21% comes from spoilage. And the food prep side of things, it kind of makes sense in fine dining, because it's like they want to present like the most ideal part of whatever they're cutting, whether that's a piece of meat, whether it's a fillet, or whether it's a fruit or vegetable.
Right. No, exactly. But I think that the onus of that certainly was the case like a decade ago. And now, especially at fine dining, because the margins are so thin, they really have to figure out something else to do with like that, with a less attractive piece of duck that's not going on the customer's plate.
Well, are we going to start accepting that as customers? Like, what do you do with that piece of duck if the person who walks into that fine dining establishment doesn't want that?
I mean, it depends. There's different categories of diners, and there's some people who are like, oh no, like how could you? Oh, but I think now there's so much, people love something imperfect because it generally tells a story, and I think chefs and restaurants, me and you, Carol, but I think most diners, especially if they're like Gen Z, are not necessarily looking for the exact perfect slice of Wagyu.
Love this story. Actually, there's a bunch of people in this story I want to get on our air to talk about kind of the stuff that they're doing.
Will they bring some food? I don't need the mushroom.
That's part of the deal.
Tim eats.
I don't need
during our show.
The mushroom powder. I don't need the mushroom powder, but anything else.
You can let them know that. It can be part of your rider.
Yes. Counter table, Tim's always eating. Yummy. Kate, thank you so much. Great to have you in town, too.
That's Kate Crater, Bloomberg Pursuit's food editor.
And that wraps up our weekend edition of Bloomberg Business Week from Bloomberg Radio. Thank you so much for joining us.
I'm Tim Stenovec.
And he's hungry. And I'm Carol Massar. I might be hungry, too. Have a great and safe weekend, everyone.
This is the Bloomberg Business Week Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.